How is everyone doing? Hey guys, we're gonna wait just like about 1 minute, wait for people to kind of log on, and then we're gonna jump right into the market update. What happened in April? What's going on now? And kind of forecasting out. We'll kind of keep it nice and tight, just like always. And any questions you guys may have, just go ahead and put them in that chat box throughout the presentation or at the very end. I will answer questions until they are all done. So we're gonna get going in just a minute. Good news is we'll talk about this in a few slides, but it's the market's really picking up. So a lot of properties are selling. They're selling for above what they were at, 60, 90 days ago. So definitely some bounce back going on in the market. All right, we'll just give it one more minute. All right, guys. Well, we're gonna get going because I know everyone is kind of got their stuff to do today. But just a quick background for the people just joining us for the first time. Who I am is I'm a local real estate investor out of the Pacific Northwest. We're covering all Pacific Northwest information. For more information nationwide, make sure you check out Bigger Pockets on the Market podcast. But for our local people, we're gonna get going. So who I am real quick. I've been an investor in the Pacific Northwest since 2005, 2006. Me, myself, myself and I, blah, blah, blah. Myself and my partner, Will Heaton, have been flipping. We've flipped over 2,000 homes. Very, very active investors in the market. We build homes, flip homes, buy rental properties. We're constantly have our pulse in there. And the purpose of why we're doing this right now is we just want to give everybody live, up to date information. All these headlines can be a little bit nerve wracking, and they like to kind of scare people. But there's a lot of things going on in the background that are actually looking very, very positive, and we're going to talk about that. Since starting in real estate, we've been involved in over 3,500 transactions and done over $1 billion in sales on value add. So again, we're very active investors in this market. Any kind of market cycle we've been in and out of. And so like as markets change, it's important to pivot, change up your business plan. And that's kind of what the whole premise of all these free presentations for everybody and just updates so you guys can get the information, make your pivots, and keep buying and keep growing as investors. So far, 2020, what we're covering today is we're just going to go over what happened in April. We're going to cover King, Snohomish, and Pierce County, interest rates, inflation reports, and kind of investment trends and what we're seeing. All right, so let's go into the Tri-County right now. I wanted to kind of reference the median home price. So we've seen a little bit of a bounce back. King County recorded at 819,653, which is a negative 4% year over year. So yes, it is down year over year. But one thing to kind of notice is last year, April, May was the peak of the market. It was at its absolute highest. Um, we saw a ton of people. We saw the market really pull back in June and July. So we're going to see the data kind of skew a little bit on the reporting as far as percentage wise year over year. I'm going to be very curious to check June and July to see if it's actually going to be up year over year because we saw such a massive pullback and kind of a panic sell real quick. But the good news is King County came in at 819, which again is down 4%. But over previous months, I think at the end of December, we were trending in the high sevens. So we're seeing a little bit of growth back. And that's pretty normal for these kind of scenarios, right? The consumer, the buyers out there, they start to overthink the market a little bit and they all just jump on the sidelines. And when you have a big wave of people just jumping off the sidelines, waiting for that screaming buy, it causes a quick drop in a little bit of a panic. Now what's happened is as things have sold off and people are seeing inventories really not hitting market, they're going back into the market pretty aggressively to try to secure their house because what they don't want to do is pay high pricing and lock in the high rate. And so there's a little bit of FOMO going on where people are kind of really jumping after it. Pierce County median home price is at 5.34% year over year. Again, a little bit of a bounce back. I think we were in the low fives a few months ago. And you guys, these are always going to be graphs depending on what things we're selling for. the previous year. So you're going to see a little bit of a variance on that kind of jumping around. That's probably normal. I would say a 5% swing is pretty normal, but we are seeing a little bit of growth in all markets. And then Snohomish County median home price closed in at 685, which is down 9.52% year over year. I don't think that really has to do with anything with Snohomish County besides it's just the sale volume was a little bit lower. Because in the previous month when we talked about this, Snohomish County had the lowest year-over-year drop because they had some higher sales going on. So again, with the lack of data and the lack of sales going on, it's going to really skew the numbers. When you have a limited, basically sample pool or average pool, bigger sales can really affect. Like if you're selling something that's 3-4 million as a luxury property inside this kind of county, that can actually have a little bit more impact on what things are closing at and the median home price. So just just kind of watch for the trends rather than just go right after the data. If you look at 9.52, that looks intimidating, but it's really not because it's kind of moving around. Overall, Snohomish County is actually doing fairly healthy for the listings I've seen. I just comped a property we just bought. And there was, when we purchased the property, we had 2 sales and limited sale pool or limited data pool. Both those they're a little bit spaced out, took a few days. The last 3 homes that were listed in the 8 days since we bought this property have all sold in 4 days and went over list. All for higher than what we had just bought on. So the market is moving a little bit more. And that's more what I'm concerned with right now is not these hard stats that are rolling out. I'm looking at more of the trends and where things are moving. So home prices in Washington overall were down 7.1 year over year. At the same time, the home sell 31.9% and the number of homes sell 5.9%. Median home price is at 585, down 7.1%. And days on market were up 16, are trending at 25, which is 16 days year over year increase. And you guys, that's all normal stuff. Like, yes, 16 days is a huge percentage. I mean, that's like a 400 or 500% increase. But the days on market at 25 are still super healthy. And what we're seeing I think in King County, they recorded in at 18 days. And so we're seeing this actually starting to pull back. And there's been a 0 increase in supply year over year. So King County inventory, there's 2,000 homes for sale. That's down 7.5% year over year. And so that's showing that there's just nothing to buy. And that's why homes are starting to bounce up right now. A lot of the homes, I would say 50% of those homes that are listed at 2,000, 1,000 of them, they're actually overpriced and not that great anyways. So that again is kind of a weird data set in itself. So if people are looking in the market right now, they really only have about 1,000 homes that they want something that's good and renovated. And so what's happening is people are jumping on things and things are moving despite cost of money. Days on market are at 12 days, which is up 7 days year over year. So it sounds like a higher number, but that is down. That the fact that recorded at 12 now, that actually is down almost 60% from the beginning of the year. We were trending around 30 to 34 previously. So that's showing you that absorption rate and things are going pretty quick. 29% of properties sold at original list price. That's again an increase. So things are starting to transact at list price again. I think once this set of data records at the end of this month, we're actually going to see that that number change a little bit because I know I'm talking to like 10 or 12 brokers in the last 48 hours. All their properties were all pending above list. Now, not dramatically, but they're all above. And so again, it's kind of showing that the market's heating up. 32% sold under asking price in the last 32 days. So again, people are still wheeling and dealing. Most of that's because people are pricing their stuff really heavy, kind of anticipating the negotiation. And so that again, that data point I'm not too concerned with because the pulse on the market is telling a different story than the recorded stats. Pierce County inventory is at nearly 3,000 homes, which is down 7.6%. Number of sales decreased 26%, right? There is roughly 8% less inventory, but the transactions are down 26%. So a little bit less movement in the market. Days on market are at 22 days, which is a huge increase from previous 60 days. I think our data on days on market at Pierce County we're at roughly 35 to 40 days in the first quarter. So again, a really good sign, as things sell quicker, inventory is going to keep tightening. The more it tightens, the more appreciation we could see, which is pretty crazy considering the cost of money has doubled. So we could see some actually appreciation towards the end of the year based on where things were at 4 or 5 months ago. I know most of our performas, if we bought any deals in the last 3 to 6 months, they should be selling for a little bit higher than we were performing them at because we were being really conservative, and also the homes are kind of bouncing up. Percentage of list price 30% sold and 28% sold under list price or under asking price in the last 30 days. Snohomish County inventory is at 2,300 homes. That's a 5% decrease year over year. Numbers of sales decreased 35%. So again, the transactions have really slowed down out there. A lot of that has to do with the inventory, but the movement's going a little bit different. Days on market are at 16, which is about 50% less than they were at the beginning of the quarter, up 11 days year over year. So again, that number's trending down. All three counties are looking they're looking good right now. And then percentage of list price, homes sold at 32% and 26% sold under ask in the last 30 days. Our listings. So we are getting a showing. Sorry, guys, that's actually a typo right there. We're getting about on average, we're getting about 8 to 10 showings a week. Now that doesn't mean every one of our listings. That's kind of the average, because what we are seeing, like in our east side properties or our properties priced in the sweet spot of Seattle. The sweet spot right now is like 7 to 900. That is a very, very busy market. 900 to 1.1 is also fairly busy. And so what we're seeing, as long as you have good product that's priced accordingly, is we're seeing more around 10 to 12 buyers in a weekend come through, especially if it's nicely renovated on a good street. If you have anything weird, the 3 to 4 showings is kind of in that realm. Um, so again, the bodies have increased, I would say, at least 5 times the amount in the last 60 days. So a lot of people coming through. They are still being very, very selective, but the more bodies in the market, the better the market starts improving. So we are definitely seeing that. That's actually one stat you really don't record or pull data on, but it is the realest stat to me. That tells me how many people are looking in the market. If we look at absorption rates, the amount of people per homes for sale, they're 3 to 4 times more people looking homes for sale. So that tells us the absorption rate should be moving fairly well over the next 30, 60 days. Right now, we have 25% of our listings not pending. So we're pending at 75% of our listings right now. So things are really moving. Average days on market, we're trending at, sorry guys, 33 days, not 53. So things are moving fairly quick again. And we're seeing that trend. Part of the reason that we're double what most counties are at is because we are the nicest product in the market, and things do take a little bit of time to sell. Some of the luxury items, like if you're priced, 1.7, 1.8 and above, 2.5 and above, that those markets are taking a little bit longer. They're 60, 90 days on average, and so that's going to skew that days on market. But other than that, things in the sweet spots are going to be your, I would say 550 to 7, I would say 550 to 1.1. That market is just moving. And if you're in Pierce County, you're 450 to, I would say 600. That is moving really quick too. So those days on market are trending more around 10 rather than 53. And then we have been selling around 99% of list on the last few transactions. I think the last 4 we sold fully at list or above list. So things are looking good. So what is this going to look like by the end of the year? Well, part of that is we want to dig into the inflation review and kind of what's going on with the interest rates. So the good news is on inflation, I know everything seems really expensive. It is really expensive, at least to me, but what we are seeing is inflation has slowed for the 10th straight month, right? And that's the trend we want to see down. If it starts improving, the Fed's going to kind of back off of some things. Consumer price index climbed to 4.9% in April from the year earlier, less than 5% than economics and Bloomberg surveys had expected. So it's dropping down for the 10th straight month. A lot of economists were anticipating it to be around 5 to 5.25, and it came in at 4.9. So we are outperforming what people are predicting right now. Those are all good signs because what's happened is a lot of these economists were forecasting the wrong way 12, 14 months ago, and they said we are going to get through it and there wasn't going to be some massive rate increase, but they were completely wrong. And that's why they had to step on the gas on these rates. So the fact that they are wrong, thinking it's going to be worse and it's getting better, is showing good signs and that things are improving. And so, and then another thing to notice is inflation has come down noticeably from peak. Um, in the summertime, it was at 9%. So we're almost at half the percentage that we were seeing at summertime. So it is going the right way. This is also the slowest annual rate increase or raise in the last 2 years. So things are looking good. Interest rate review. So as I think many of you guys know, the Fed did announce another quarter point hike. We're hoping that this is going to be the last one for a little bit. I think they're really going to be checking these. I mean, this inflation report coming in lower, good signs. This is helping. So what we think is we don't think that the Fed is going to do another increase on this next month. I think that they're going to kind of take a breather, see what happens, and then kind of go from there. Um, so they did do a quarter point hike that has the federal funds rate currently at 5% to 5.25, which is a 16-year high. But the crazy thing is we're at a 16-year high, but things are starting to absorb faster. So we might just be slowly moving into a very expensive market to where things are just going to cost more and cost of housing is going to cost more. And so definitely things to keep your eye on. I do think this is looking good. They slowed down from the 3/4 point hikes. They went into half. Now they're at the quarters, and then it's kind of like this taper off to where I think we could be. We might even see the federal funds rate down by the end of the year, which would bring rates down. So trending the right way. What many economists are forecasting right now is by the end of 2023, or by the end of 2024 or in 2024, the in 2024, they are thinking the federal funds rate is going to be at 3.75. So that's one and a quarter to 1.5 points cheaper than where you're at right now. And as rates fall, prices rise. And so it's a really important thing for all investors to be studying right now, because this is where you can really grab some wealth and really grab some huge profit deals. Because if you catch that window right, and let's say if in theory, when interest rates drop 1%, that in theory brings up the affordability by 10%. So we could see a 10% growth very quickly as rates fall. If that happens, your portfolios that you're hanging on to or rental properties that you're hanging on to could have some massive growth. So if you are thinking about buying rental properties right now, please reach out to us. It's a great time to do it. I just contracted one yesterday. Um, for myself. So I'm constantly buying right now because I'm really looking at this whole interest rate thing, and we're running numerous different scenarios. We look at it today, but then we're really looking at what does this look like in 2 years when rates are in the fives? And the cash on cash returns are hitting 10 to 15% on today's math. And so there's some really good buys out there right now. Just to put a little bit of math on display, things are still affordable. We just kind of wanted to point this out. Single family house, if you had a 3.25 rates, your payment was 4,300 today. That is a type. It would be 6.91%, and that's 65.93. So again, a pretty big increase on the payment. It's been tough to make multifamily, especially small multifamily, pencil. Back in January, a little bit easier. It was at 4. If you financed $1 million at 4.25, your payment was going to be 49.19. And if you today you bought that property at 7.5%, it's going to be roughly around $7,000 a month. So big increase. That is one thing we are seeing a low absorption rate on right now, though, is your multifamily properties. They're not selling that quick. It's hard to make deals pencils. Where we're seeing most of the transaction are with 1031 exchanges. And so if you are looking for multis, definitely be patient. Make sure the numbers work, but really focus on that growth. The ones that we're looking at, because cash flow is pretty constrained right now with the high rates, is we're looking for properties that have additional zoning upside, that have additional buildable lots, or that we feel are in high growth markets over the next 5 years. Because again, if you target properties in the path of progress and rates start coming down, that's where you're going to get these giant equity swings. The impacts we're seeing from these rates, longer market times, including on that multifamily, and that's taking a very long time to transact. We're still seeing some irrational price drops. I'm seeing properties sell 20% off list in a weekend, which seems a little crazy to me. Buyers are still being selective. We are seeing a lot of buyers through, but they are taking their time, right? They're looking for every reason not to spend a lot of money on their mortgage. And so you do need to be patient, make sure your stuff is perfected, make sure it's priced right, and then things will sell. And then showings have had a huge increase over the last 90 days. So trends we're seeing, showings have increased 100 to 200% in the last 30, 60 days. Days on market are trending down 35 to 50% in King, Snohomish, and Pierce County. So again, bouncing back. And we've seen some growth in neighborhoods. I mean, a good example is we just sold a property for 700 and change in Seattle. This seller had sold the exact same product within a tenth of a mile for 600 90 days ago. That is a huge jump, and that's all mental. And it's more of it tells you how the consumers are thinking right now, because in theory, the rates were the same, the payments were the same. We shouldn't have seen $100,000 growth in a 60, 90-day window. And so what that's showing you is the buyers are just getting back in the market, because when they sold it for 600 originally, that was a really low number. That was well below peak pricing at that point. So it had this huge drop back, and now we're seeing it pull back up. A lot of healthiness in there. What we're doing on the underwriting, we're still increased on hold times expense for all of our deals. We've had 1 to 2 months on all that. We're adding construction contingency. We're still sticking with the cluster comps, not the one high comp. And we're talking to pending sales. That is the most important thing. What is going on in the market today as we're underwriting it? And then we're targeting increased returns of 16 to 20% on our short-term investments. So you guys, if you have more questions, we're going to open this up for questions now. If you guys want to put it in the chat box. If you want more information, free education, you guys check us out at Heaton Dainard on Instagram or at JDaneFlips. LinkedIn, you can check us out at Heaton Dainard or James Dainard. And on YouTube, go to Project RE and Bigger Pockets on the Market podcast. Also, for any flippers or construction people that want to learn a little bit more, we have our Project Flip that is launching in 2 weeks. It is almost sold out. You guys, it's actually moved a lot quicker than I was expecting. Good news is we will have numerous of these running now. So if you don't make this window, we'll have another one in another 4 to 8 weeks, to where you guys can kind of hop in the mix on that. And then we have a lot of cool community things that are being coming out that are attached to that, to where investors are going to get benefits for life, as far as mini courses and teaching you about different platforms. So I will open this up for questions. I will stay until they're done, unless you guys are quiet. So, no questions there, huh? This will be up first. Hey, what's up, Stuart? Yes, we are still buying dirt in Seattle. We just closed 3. So bring us your dirt deals. You guys, we are buyers right now. We just closed a property in Bellevue through a wholesaler. Just closed on a few dirt lots. I just bought 2 houses. Just bought a duplex in Bellevue. Well, hopefully, I think it's contracting right now. So we are being very, very aggressive in all segments: multifamily, single family, dirt. Bring us your deals. We will look at them. In addition to any wholesalers out there, you're thinking about it, we can kind of help you with the underwriting. Underwriting and comping deals definitely takes a lot longer right now. You got to slow down. You really got to crunch your numbers. And you got to look for those good data points. You can either miss a good deal or way overpay. So definitely bring it to us. We will look at it, get you good advice. One thing on that building question is, yes, we are always buying, but we have seen build costs on new construction come down quite a bit. You know, I'd say good 10% in the last 90, or I'd say 6 to 9 months. The fix and flip contractors, man, these guys, they just don't get business. Because that doesn't make any sense, right? Fix and flip construction has been holding pretty tight. We have been able to get some definitely breaking. We've gotten some price breaks on roofs. We're starting to see some electrical fall. We're seeing siding come down quite a bit. Decks and fences have came down quite a bit. Um, but overall, the guys are kind of sticking there. And you guys, that really just tells you who you're hiring, right? Like new construction are they're bought out company. They're companies that run pricing on a very logical fashion. Price per square foot, cost of material, what's the average rate that's being charged around town. Fix and flip guys are just throwing numbers at whatever they can just to ballpark it and see how much they can make. So you really got to watch those costs at that point. And just talk to them. Don't negotiate, educate them in a normal way. Don't just do this cat and mate, like, hey, I want it for less type scenario. Um, one thing that's been working on us is like even like our painters. Our painters pricing, our cheap guys were charging us a lot. And so we just started plugging in our new construction because it was costing us like 30 cents more a square foot. And the guy got a little upset with us. But at the end of the day, his quality of work is worse. He does not show up on time. He kind of leaves the project in and out, and he's roughly the same price. So if you're going to give me that service, I want it for 35% cheaper. So we just started replacing your guys. Don't be afraid to replace your guys. Um, and a lot of these guys have been coming back recently because I think they kind of realize that they can't. They're overcharging for the quality that they're delivering. So negotiate your guys. Now I just went off on that tangent. All right, guys. Any more questions, or I'm going to wrap this up? We got deals we're trying to get done. So I'll give it 30 more seconds. Okay, guys. Well, thank you. I want to thank everyone for coming out. Easy question day. Again, check us out, heatondainard.com. You're looking for a buy, definitely come to our one-on-one class. We had it on yesterday. Come check us out. We will get you a deal.